Hey there, it's Ryan G. Wright with DoHardMoney.com. And the question is multifamily homes a good investment or multifamily? Well, first, let's just talk about what multifamily is. Typically, you're dealing with single family homes, and typically something between a duplex, threeplex, fourplex is going to be considered under that non-multi. And when you're dealing with multi, it's going to be a fiveplex plus. And there's pros and cons with this. With this, you can start getting some economies of scale, meaning you can have a 10plex, a 20plex, a 50plex, a 100plex. And as you start getting a little bit bigger, when you buy a fridge, you buy 10 fridges or 20 fridges or 30 fridges. So you can start getting some discounts and some big packages. You can also deal with having on-site management where they can actually manage the property once you get to a certain size. Those things can be good. It's typically easy to get those types of loans, but it does require really good credit. So rather than going and getting a loan for each individual apartment, you're actually getting a loan for the entire project or all 100 units at once. But they do require good credit, and it is going to require a lot of money down. So you're typically going to need at least 20% down. And when you're dealing with something that's 20, 30, 40, or $50 million, you're talking about a significant amount of money down. Now with that money doesn't necessarily have to be yours. And that's where the business of syndication comes in. And basically what happens is you can be a sponsor where you're the one that goes and finds that deal and puts the deal together. And then you can go out and solicit people that will actually bring that money to you, and they'll become what's called limited partners. With that, they get a small percentage of the overall ownership of the project, but they are not in charge of making any day-to-day decisions. So that's investing in multifamily through a limited partnership. Now, you can also invest in multifamily as a general partner where you're the one that's actually raising the capital, finding the deal, and you can invest in multifamily by being the sponsor where you're the one that's actually signing for the loan, getting that loan, and putting the whole deal together. So those are some of the things you're dealing with multifamily. Now, if you want to just go out and do a multifamily all on your own, first, you're going to have to find a really good deal, but second, you're going to have pretty significant financials, and you're going to have a pretty significant amount of cash to actually make that deal happen. So it's usually harder to get started. If you're wanting to get started in multifamily, it's typically better to start as a limited partner and maybe move up to be a general partner and then start getting some more cash. So it takes a lot of money to get started. Whereas if we're dealing with single family, you can get started for not a whole lot of money. We typically tell people less than $5,000. You may have to start by wholesaling property. So there's some pros and cons with that. Being the limited partner, you don't make it as much money as if you were flipping a property or doing the project yourself, but you can typically make some decent returns from doing that. But sometimes they'll share in the upside. Sometimes it's just a set interest rate. It depends on how that structure is actually set up for you. So some pros, some cons, both on the single family, the fix and flip, the wholesaling versus doing the multifamily investing. Hope this is helpful for you. Check us out over at DoHardMoney.com and make it a very profitable day.